Mr. Bratcher, how are you today?
I'm here, I'm good.
Let's see.
How are
You can go either way. I think he may or may join us.
We'll make him sit in that uncomfortable chair.
There we go. All right, we'll go ahead and get recording. All right, go ahead and call to order. This is the May 25th, 2023 meeting of the Budget and Audit Committee. First item of business is the approval of the minutes. I think those have been distributed out to everybody. These are the minutes from March. Are there any questions or corrections on those? If not, those will be approved as presented. The next item is item 3A, report on revenues. Mr. Arnold, could you run us through that?
I'll be very quick. The monthly report I've been providing to you guys, I just didn't have time to complete all of these numbers, but I did look at the sales tax, which is the largest numbers on here. So year-to-date now, this year compared to last year, local sales tax is 9% above year over year. That's about $1.8 million. State sales tax is about 7% up. That's about $500,000. So that's year-to-year actual, right? You may remember this year we actually budgeted for a small decrease in sales tax. So compared to budget, those numbers would be larger. I will tell you, if you kind of look at it, I know there are seasonal impacts. It's hard to understand sometimes, but the favorable variance from my observation, just the eye check would kind of suggest that it's decreasing every month. So, and of course, I don't want to get ahead of the budget, but in next year's budget, essentially, we've sales tax is kind of budgeted flat with where we are this year, about an 0.8% increase, so, which is probably appropriate.
Any other questions on revenues? Hotel motel tax, that's still trending above.
Yeah, I think so. Not above the prior year. I'd have to look because we budgeted this year a pretty nice increase, so it's probably rather close to budget. I haven't checked that, but definitely trending ahead of the prior year. So.
Okay. Any other questions for Mr. Arnold? Our next item is a report from our internal auditor, Ms. McKinney.
All right. Good morning, everyone.
Good morning.
Internal audit has been very busy this month. Basically, we've been following up with just standard operations, following up with department inquiries and things of that nature, working with our communications department to make sure that our ethics website is up to date and where it should be with our new ordinance and so forth for this month. Tyler Muniz training, spent a lot of time, and Paul, you know, with ordinance committee this month. And as far as we get ready to transition into the new fiscal year, I've been pulling a lot of ordinances from different cities as we prepare to welcome our new audit committee. I've also talked to several audit professionals in the area that have true audit experience and kind of gauge their interest in maybe serving on that committee. So I have a list of good recommendations for review.
Okay. I have, and I'll pass this out after kind of the end of the day, but I have a couple of recommendations. One of those is just what you spoke about. We passed a change in the ordinance, splitting the budget and audit. We've been having the audit function and the audit oversight function and the budget recommendation function. And the council and the code committee decided to split those into two boards. So one is the budget committee, the other is the audit committee. And so that, as a reminder and a recommendation, we'll have some findings to review today. In this audit, there's some findings in the JTA audit, and the recommendation that we'll have later is kind of addressing those and developing a process to deal with those for this fiscal year and next fiscal year.
Yes.
Okay. Any questions for Ms. McKinney on her report? If not, we'll go ahead and hop into our annual audited financial statement report. We have Mr. James Bentz from Malden and Jenkins on the line. I believe you have a copy of his PowerPoint presentation in the materials in front of you, and then we have those on the screens around us too for your reference. Mr. Bentz, can you hear us?
Yes, sir. Can you hear me?
Yes, we got you. How are you doing today?
Doing well. Thank you.
I'd like
You ready
to.
for me to go now?
Yes, before you get into this, I'd just like for Mr. Arnold, if he could, just provide us kind of a snapshot of the process this year, and then get you to reflect a little bit on that as well before we get into the discussion, if that's okay.
Sure.
Okay. Thank you, Councilman Taylor. Yes, I'd like to kind of address the audit process this year and where we've been and where we are. First, I just want to apologize or share my regrets for the fact that the audit is much later being completed this year than what it has been historically. I certainly understand what's expected, and we fell short of that in terms of the timeliness of the audit this year. I want to comment for this group and for those of you who have attended these meetings the last, 6 or 7 months or so. We've been updating this group on the audit process and the status of the audit each month. But just to kind of refresh everyone's memory, unfortunately, we just had a series of events this year that made it a very challenging audit season. It all kind of started, and probably the biggest impact was back in August of last year, right at the beginning of the audit process itself. Our finance and accounting supervisor resigned to accept another position working in the town where she resides at. That left a really big hole in our department. She was a very tenured employee. I can't remember. I know in excess of 10 years, maybe 12 years. Had a lot of knowledge and experience. Was our most adept employee at kind of navigating through our technology system to respond. So, nonetheless, that left a very big gap in our staff, and also, that's right as we're kind of turning our trial balance and making sure we got everything right over to the auditors, and I think during that transition, Mr. Bench will address it, but we missed a couple of accruals and some things like that were unfortunate. He'll talk about those in the audit, but that position stayed vacant for a period of time as we tried to identify a candidate and recruit, but we were unsuccessful doing that. So what we did is we promoted from within and filled that position, but that created another vacancy when you do that. So essentially, we were kind of one person down throughout the whole process, and we had really good people working on the audit. Our internal person we reported, I respect her so much. I think she's going to be great along. She worked really, really hard, but the job was brand new to her. And all the work on the computer system was brand new to her as well. So all of that combined was kind of one contributing factor. Another factor was the fact that our Tyler Munis implementation, which I think everyone here is familiar with that. We've worked really hard on that. Just the way the schedules worked out, though, the highest demand time since we started the project for Tyler Munis kind of run parallel with the audit timeline as well. So we struggled to kind of juggle those balls and to stay caught up, and it definitely impacted things. And then I think the final factor that we've mentioned before is not to elaborate on this or get into the weeds on this too much, but our audit process and the issuance of the audit itself were both delayed, pending the completion of the CRA audit, which is a component unit of our audit. So you roll all of that together, and unfortunately, we weren't able to complete the audit, as quickly as is expected. And we'll try to make the corrections. Hopefully, we'll be fully staffed moving forward, and so we'll be in better shape next year, I hope. So I hope that.
Yeah, I think that provides some context for where we are at. Mr. Bentz, if you wouldn't mind providing some comments on that, and then go ahead and begin with your presentation.
Absolutely. I think we all agree that this is not the ideal timeline of when the audit's getting issued. But as Mr. Arnold mentioned, it's kind of the whirlwind of all of the unfortunate things to happen during the city's closeout process and preparing for the audit. You know, I don't have dates in front of me. I guess I didn't come prepared for the timeline discussion. But, you know, we had our scheduled field work date, and Mr. Arnold was very forward at the beginning with the turnover in the department. And then I think on top of that, the Tyler Munis. So we moved our audit schedule back a little bit to kind of accommodate, and then they were still needed more time to kind of get the information ready. And obviously, from an audit perspective, we you know, the first and foremost thing we got to have is a trial balance. And then once that's provided, we need the audit evidence to be able to audit the trial balance. And the city has worked to get that to us. You know, I think if you look back at last year's audit, we had a segregation of duties comment. We have that same comment this year. When you have a small staff and you lose a key member, it inevitably is going to have a huge effect on readiness, accuracy, and delivery. And so, you know, on our end, once we kind of get off the schedule, it's hard for us to just, you know, realistically, we're not sitting by the computer waiting for things to come in. So as the city prepares the information, we then reschedule audit time. And when we have the audit time, we have questions. And then that, you know, unfortunately, when they have a turnover in the key department member like that, sometimes it takes a little longer for the research into those questions to come back. And so it kind of all expanded as we moved down the calendar. All that to say, you know, the other thing that Mr. Arnold mentioned, the CRA audit was actually released. I think it was dated at the end of April and was released in early May. So we've got to figure out a way to not only get the city's audit back on the timeline, which is key for you all, and then we can evaluate how we handle CRA's audit when it's, if it continues to run late.
Quick question, Mr. Bentz. As far as the audit goes on going over the documents, can you go over with us, normally, how many days is your team on site versus remoting in for an audit this size? And then how many days was your team on site and how many days is your team remote in to access the documents as opposed to requesting emails and information?
So that varies, and this year, and I think I mentioned this in an email, there was a little misunderstanding on my part because I was under the impression Mr. Arnold was working in a remote environment himself. So we have some audits that we do 100% remote, and information is loaded and provided, and we have some audits where we do the hybrid, which is more typical, where we have remote audit time and on-site time, and that really is client preference. You know, COVID did open the light that audits can be done without having to be boots on the ground, so to say. Typically for your size, we spend, you know, looking back to last year, we would usually spend a full week during the crunch time field work and then potentially a partial week as we wrap up the field work testing. We did do this year's audit in a full remote environment, but that doesn't really drive the service of the audit. It just, if anything, it may have added more scanning on documents if there was any paper documents provided to us.
I guess my question is,
we've talked about next year and
the
making
team
sure we
viewer
get back
piece,
to having
Bobby,
some more time in the office at the city,
Did-
just as a preference.
we provided team viewer access to Jamal Jenkins. How was that utilized as opposed to request by email?
I'm sorry, say that again.
The team viewer access that we allowed your team to remotely log into our system, how was that utilized versus requesting documents through email, utilizing the team viewer software that we provide you access to?
So my understanding on our end is we were given access, but the initial access we were given didn't give us access into the system. And I would have to just apologize. I think we did not follow back up to get the access that we needed. And so we continued to conduct the audit through the SureLink portal and through email requests.
So you knew you didn't have the access, and there was never any request to gain access to get the system to make things more seamless and easy for everybody?
That is correct.
Okay, thank you.
Thank you, Mr. Bentz. If you could go ahead and proceed with your presentation.
Sure. So you should have, and certainly if not, I'll have the slides here, but you should have our auditor's discussion and analysis, which is our kind of summary snapshot of the audit. I don't intend to read all the pages, but I'll go through that document. And then you should have the actual annual financial report that is prepared by management and which we give our audit on. And so, I'm going to go through our auditor's discussion and analysis, but if any time you have any questions or want to look at anything in specific, we can certainly jump back and forth between the two. So getting into the presentation, just as a highlight of both the key team members and Malden and Jenkins as a whole, I know we meet each year with the audit committee, but just as a reminder of who we are, we're a large regional firm who specializes in local government audits. We have about 16 partners, myself included, who serve local governments year-round. And we have actually 13 offices in 6 different states. We've closed one of our smaller ones, and we just opened a Raleigh office here recently. I served as the engagement partner, meaning I was responsible for the overall audit process and the audit report. And then we also had a quality control partner who was Meredith Lipson this year, who does kind of our high-level quality control review once both the city and our audit team is complete with our audit reviews. Just kind of make sure we kind of dot our I's, cross our T's, and she served in that role for us this year. The summary results on page 3, we did issue an unmodified opinion for this year's audit. With that, we conducted our audits in accordance with generally accepted auditing standards as well as government auditing standards, which means that our responsibility as your independent external auditors is to give an opinion as to whether or not the financial statements prepared by management are materially correct as presented. And so those standards don't require that we give an absolute assurance on the information, and we don't audit all facets of your report. And so you'll see in here the Jackson Energy Authority and the CRA is audited by other auditors whom they contract with. And we rely on their reports as it relates to the opinion we give on those 2 entities.
Mr. Bentz,
we did.
If you can hear me, this is Paul.
Yes,
This is Councilman Taylor here. Question on that, and this is from the other governments that you participate with. Is this typical of having these component units and relying on audits for the audit of the government itself?
It's a blend. It is. I will say it is not uncommon at all for component units to be audited by other auditors. And generally speaking, when you get to utility agencies, those tend to, because they have their own governing body, their own management, they want to have that control of their auditors. Usually if you have a component unit where most of the accounting, management, and or governance is tied back to primary government, in this case the city, those would be audited as part of your audit contract. So it depends on the government that you're speaking of, but when you get to the bigger governments that have utility authorities or that have large independent component units, those do tend to independently go out for bid, and sometimes it may be with the same firm, and sometimes it may be with different firms.
Thank you.
Yes. So anytime we have a government audit, we also have to issue what we call kind of the single audit section or the compliance section of your report. All government audits include what we call the Yellow Book report, which is the report that gives kind of the summary of our internal controls, and that's the report in accordance with government auditing standards. We did issue an unmodified opinion on the financial audit. We did identify, and we'll get into them a little later in here, some material weaknesses and significant deficiencies that we'll talk through from the audit process. I will say, just as kind of a clarification, government and auditing standards do define how we identify material weaknesses. And so their threshold for identifying that is anytime the auditor's involvement identifies the need for an adjustment, which is deemed material, then the auditor has to report it as a material weakness. Anything below a material adjustment, the auditor has a little bit of a subjective decision in whether or not it's reported as a significant deficiency or maybe a management letter comment. And so, again, just to kind of clarify and maybe make sure it's clear, things that we are reporting as material weaknesses are driven by the auditing standards to be required to report as such.
Mr. Bentz, one question I have is, as it relates to the city and this audit, what is the definition of material?
So there are various levels of materiality, and in your financial statements, everywhere that we have to give an opinion has a different materiality aspect to it. And so we have to opine on your governmental activities as a whole, your business type activities as a whole, and then each of your major funds individually has their own materiality, and then all of the non-major funds have their own materiality. And so as a example, I apologize, as an example here, see if this will show you the statements. If you're looking at your statements on page 16, each column is considered a major fund of the city, and we have to give an opinion on the presentation of essentially each column. And so we have a materiality calculation for each individual fund of the city that is a major fund, and then all of your other funds that don't show up as their own column, they're in the back of the report, and we opine on them in aggregate. And so I didn't count beforehand, but to see your size, you probably have close to 12 different opinion units, and each one has its own materiality. So depending on where the journal entry is or the need for an adjustment, they have different levels of materiality tied to them. We don't, because we have 12 opinions we have to give, we can't use one citywide number as our materiality determination. Does that answer the question?
I mean, yes, it was not what I was hoping for, but I would assume there was some percentage threshold of deviation that would trigger, is this material or not, but apparently that's not the case.
There is, and it's based on generally your revenues or your expenditures of each respective opinion unit. And so it's different every year. Obviously, it changes based on the activity of that opinion unit year over year. But it's not as, it's a formula that our software provides, and it's not as simple that I could just say it's 2% of revenues. It's almost kind of like a income tax formula where it's based on different threshold levels.
Okay.
So along with that, we also issued a uniform guidance report this year because the city has had, as they did last year, more than $750,000 of federal expenditures. And so anytime you have total expenditures of federal awards in excess of that, you're required to have a single audit. And in order to cover the high-risk programs and the required coverage for the city, we did have two major programs that were tested this year, which was your Corona State and Local Fiscal Recovery Funds, which most people commonly refer to as the ARPA money. And then we had your Highway Planning and Construction Cluster. And so those two programs were tested. We identified no material weaknesses and no instances of material noncompliance with either of those two programs for the expenditures in the year June 30, 22. I'm going to skip over on these and go to page 7. On page 7, one of the things the city, along with many other, or with all local governments, had to evaluate this year is GASB statement number 87 was required to be implemented, and that dealt with how you account for lease transactions, whether they were the historically referred to as operating leases or historically capital leases. We had to look at how we deal with and account for long-term agreements that were structured as leases. And so through that, the city ended up, we did record a lease receivable for the city this year, but we did have one past adjustment where the city went through the process and determined it had several small immaterial lease contracts that amounted to $111,000, and we agreed with management that those were not material to the city's liabilities and long-term debt, and so those were not recorded in the financial statements, but they were evaluated and considered by management.
Mr. Bentz, I'm assuming the most significant adjustment here was with the Madison School lease, is that correct?
That is, but it is what you have recorded this year as your lease receivable, and it's not in this 111,000. It was a significantly larger number. Let's see if you will. Bear with me a minute. I can try to pull that number up, but it did get recorded as a receivable for the city, or a liability for the city. I apologize. I said that backwards. It amounted to almost $12 million, the agreement for that.
Yes,
Yeah, that's the school.
in the debt service fund.
Yeah.
Okay,
Correct.
thank you.
And then obviously the school asset of that is turned over to the school system. So you recorded the liability for it, but have no asset on that side.
That was a question that we had going through that process. So the school holds the asset on their books and we just hold the liability on ours?
Correct.
Okay.
Which is, it doesn't put you in kind of an isolated incident, right? That's not uncommon for that to occur.
Okay.
So getting into kind of the financial highlights, when you talk about local governments, a lot of easiest places to look to compare how you're doing and how you may look to others is typically look at your general fund balance, because every entity is going to have a general fund, and the other funds may be different entity to entity. And so this is your fund balance trend. What we have here is you may be familiar from last year from looking at your reports. The majority of what you have in fund balance is considered unassigned fund balance, meaning your general fund dollars aren't restricted by external entities. They're not tied up in prepaid items or non-spendable items. So it's available to you to use going forward for operational purposes or to continue to hold as kind of a reserve. And your unassigned fund balance, it's a little bit old, but GFOA is kind of a national financial statement review entity, and they typically are recommending that you would have 3 to 4 months of your annual need for operating expenditures of the general fund be available in your unassigned fund balance. And so this year at the end of 22, you ended at 33%, which is right around 4.5 months. So you clear that 3 to 4 months, you're kind of on the high end of that side in your fund balance reserve, in your unassigned fund balance, which is a good place to be. You'll see we had fund balance come down this last year, but I think that was very intentional. We'll get into it in the next slide, but the city ultimately was budgeting and planning to bring down fund balance this year. And a lot of that tied into these almost $10 million of transfers to our capital fund so that we could fund capital projects within the city. On what we kind of call our 30,000, our airline flight review of your budget, obviously this is a very, very high level review of the budget for this year. We've got 2 columns here. We have your final approved budget from the council, and we have your actual final results from the audit report as a point of comparison. And I would imagine at this point, no surprise to most everyone in the room, we had a good year on the revenue side, and our revenues came in about $8 million, or 8% higher than we anticipated for the year. And a lot of that was driven by the sales tax over this past couple of years. We did have a little bit of CARES money in our revenue numbers, but the biggest variance here is you'll see for the year we anticipated utilizing about $19 million of fund balance. I'll kind of pause there for 1 minute and say one of the items we do have a little later in the report is part of that 19 million was the planned use to move our CSLFRF money, which is the ARPA money, from the general fund's fund balance to the grant fund. But the accounting for that, it doesn't actually sit in fund balance. It's on your balance sheet as a asset in cash and an unearned revenue based on the way that it's required to be accounted for. So it never was previously in fund balance. So while we budgeted to use 19 million of fund balance, 7 million of that is an expenditure that never really happened and shouldn't have been there in the budget process. So really, we're showing, if you take the 7 million out, 12 million use of fund balance, we actually used about 9. That additional gap in there is because we had revenues coming in at such a good clip this year. So the next trend, or the next slide we have, is kind of a trend of your significant revenue streams in the general fund. And so I think Mr. Arnold just spoke on this a little bit in his presentation, but obviously we have your two major revenue streams here, with property taxes accounting for about 30% of the general fund, and your intergovernmental revenues, which includes grants and sales tax, accounting for about 47% of the general fund's revenues. And so you can see the trend that those have gone up over the past couple of years. Our grants number kind of took a dip this year because a lot of the new federal grant money we have is actually sitting over in our grants fund. But the increases we have here is our 5-year increases. And so like our state sales tax is up about 39% over the last 5 years, and your local sales tax is up about 31%. So we're seeing a good trend in the revenues. On your business type activities, your proprietary funds, they're accounted for a little bit different. And so typically, rather than trying to look at what their equity, which equates to a net position, it's usually a little easier to look at their cash flows to really see what their year looks like. As a reminder, your proprietary solid waste fund primarily accounts for the long-term liability of monitoring the landfill, which at the end of June 30, 2022, excuse me, was estimated to be about $300,000 over the remaining life of that required monitoring period. So otherwise, most of your solid waste activities now tied up into the solid waste collection process in your special revenue fund. So you have two different solid waste funds accounting for two different types of transactions, which is why this one looks kind of very meager. Your large and more significant proprietary fund is your transit authority, and you'll see their cash flows. They do look a little typical of a transit system. Obviously, as you would imagine, no transit system is charging the riders and the end users the appropriate rates. We are very heavily dependent on both federal, state, and local funding to fund those programs. So you'll see this year, cash flows from operations ended at about $3.3 million in the negative. And they were able to supplement that with about $2.7 million of federal and state grants. And so they ended the year with a positive increase in cash of about $113,000. The next couple of slides are going to go over the findings that we had in this year's audit. And so we had two material weaknesses related to accounting entries that were required to be either identified by the audit team or proposed by the audit team to correct the financial statements. And then we had a significant deficiency that we'll get into in a couple of slides. But the first dealt with the revenue recognition and receivable process. And I'll preface this with trying to quantify it, maybe a little clearer for these. But keep in mind, all of these are entries change either the recognition period, meaning maybe it was recognized in FY23 and should have been recognized in FY22, or to change the reporting within the financial statements themselves. We did not have any entries where we identified activity that had not been reported at all in the city's general ledger. And so To me, I do differentiate between the two. And so when we have entries because the accounting is recorded wrong versus the accounting has not been recorded at all, those are different concerns. And so I'll skim through these. We can certainly dig deeper into anything you have a question on. But the first item on here is big numbers, but obviously the dollar amounts that you all received from ARP this year was a very significant portion. And because of the way it was previously accounted for in the general fund, we had to move those dollars to the new grant fund. And again, the GASB 33 accounting for how you account for these ARP revenues requires you to essentially treat it like a unearned revenue. And so when you record it as cash receipt, you should be reporting a liability for that. So there's never a fund balance effect until you actually expend the dollars. And so the city was trying to move the money over, and we've kind of met with Mr. Arnold to go through this process. And realistically, it's a very uncommon process because there's not a lot of grants that come out and you get the cash before you have costs these days. But we did have to make some pretty large adjustments to properly move the accounting for these from the balance sheet of the general fund to the balance sheet of the grants fund, rather than having them flow through the income statement. The next couple of entries, we can certainly dig into them, but I'll kind of, in my opinion, these are the things that, because of the turnover in the finance department, are the most at risk for errors to happen, because with the short staff and with the gaps in the personnel, the true monthly reconciliation of these accounts wasn't able to happen timely. And so there were some entries that in a normal year, I think would have been caught and identified by management. But this year, because of all of the changes, they kind of fell through the cracks. And so the first two items deal with moving estimates that were made during the year for reporting purposes that were never reversed. And so, for instance, in the solid waste fund, there's a monthly estimate that's accrued and then each month is reversed. But there were several months in there where the reversal didn't happen. And so those estimates still sat in the receivable, and we had the estimates in receivable, and then we had the actual billings in receivable. So the receivable numbers ended up being about 1.3 million higher than they really were, which was inflated by these estimates not coming off the books after billings actually happened. The first item on page 13 deals with just the year-end accrual process. Typically, they go back and management would identify the JEA payments that come in July for June, and that accrual didn't happen this year. So we only ended up having 11 payments recorded for the solid waste fund. And then we proposed and moved that additional payment back from 23 into 22 since it was for June's activity. And the second bullet is very similar to the one we mentioned on the other page. Again, because the monthly reconciliation of our solid waste funds AR listing to the general ledger wasn't happening, there accumulated a difference of about $270,000 that when we met management couldn't be identified and ended up having to be reduced so that the general ledger reflected what our sub ledger reflected of actual true collectible receivables. And the last item on here is an adjustment. Obviously, with the school lease, we have an agreement in place where we were receiving additional support for the debt payments, and that debt payment was recorded as cash. But rather than reporting that as a contribution and a revenue, it was actually netted against the expenses. And so in GAAP, we want to make sure we're showing those revenues gross as revenues and the expenditures as actual expenditures. And so they're big numbers, they're big adjustments, but they are recorded activity that we're moving to show the proper reporting for June 30, 22 financial reports. On page 14, in a very similar context, we just went through kind of the revenue receivable adjustments. We did have kind of year-end closeout adjustments related to expenditure and expense recognition. And so the first one dealt with, I believe this was a fire truck. Mr. Arnold, you correct me
Yeah,
if I'm
that's-
wrong, but I think
that's correct.
we paid for it and we signed the lease agreement on the fire truck last year, but it wasn't delivered until this fiscal year. And so last year, at June 30, 21, we actually reported a prepaid asset on the books. And this year, when the truck was received, entries were posted to actually show revenue and expense again for the asset. And we had to basically undo those and take the prepaid into expense because we now had the asset. And so, again, it sounds minor because we're moving things around that are already recorded, but it's a misstatement of $1.5 million on the balance sheet, the income statement of the capital outlay fund. And so we got to make sure that we get the adjustments recorded properly, even though they may already be in some fashion recorded in the books. The second item on here is definitely an unusual item for the city, but you all may recall the city acquired some land this year with the intent of that acquisition being that we would then turn around and sell it for development purposes. And when you have land that you acquire for that, for development purposes, and not for the intent of gaining or generating gain or profit off the resale, that activity should show up all on your balance sheet as another asset. And then when we sell it, we would then report the difference as our gain or loss on that disposal. And so the city was showing that in a gross fashion, showing the actual full outlay purchase for a capital item and then the full proceeds from the sale, rather than the GAAP accounting for showing that land held for development transaction. And so we cleaned that up, and we've met with Mr. Arnold on that, and certainly anytime if the city has that going forward, we'll be happy to kind of get on the front end and talk through those transactions. But it has been historically an unusual transaction for the city. And then the last two items on here deal again with items that are just timing recognition. And so they're either were reported in fiscal year 23 or 21, and we had to move them to 22, where they should be based on the underlying transaction and the date that it occurs. On page 15, the item that I mentioned earlier was our significant deficiency. We had this item last year, and I know we talked about it a little bit, and certainly I think maybe reared its head a little bit more this year with the turnover. But anytime we have a smaller staff size where we're not able to fully segregate, which realistically most governments kind of fall into that bucket, you get to the really large governments and they may have an accounting staff of 20 to 30 people, and they have the ability to separate kind of all facets of that process. We want to make sure that when we don't have that we do try to work towards putting in compensating controls to cover those gaps in those places where one individual may have more access than is ideal or may have more responsibility than is ideal. And so, as I mentioned, some of these journal entries deal with items that didn't occur for us last year when we had, an independence between the person closing out and reconciling the account and the person reviewing that activity to make sure everything was reconciled properly. This year with the city, with all that was going on with finance, with the implementation, the turnover, and the kind of shifting of roles, my opinion is those reconciliations didn't happen the same way they did because of all of that going on. And that lack of segregation is what generated the need for these audit adjustments. Excuse me. And so I know the city is currently working to kind of get back to status quo on the staff size, but we want to make sure we're getting people in the right places so that we can get back to also getting those compensating controls where we can start developing those so that we have appropriate reviews and documentations of the review of these key closeout procedures. Excuse me. The next couple of pages are items that we just kind of cite as our management letter comment. They don't rise to the level of significant deficiencies or material weaknesses, but they're kind of what we view as room for improvement areas. And so really the big one in here that potentially will go away as you transition into Tyler, but your current accounting system doesn't provide the ability to go back in time and run reports and generate audit evidence. And as you get into your new system, you certainly want to make sure you evaluate what reports can be regenerated after the fact versus which reports are point-in-time reports, because it's going to be critical to the year-end reconciliation process for management to be able to know and identify if a report has to be run. For instance, a receivable listing has to be run at June 30th. If you run it in August, it's no longer going to give you the information to reconcile back to the June 30 trial balance. And so making sure in whichever system we are in and whatever subledger system we're using, if we know that a specific report is not or is a point-in-time report, then we need to make sure we have processes in place to run those at that point in time.
Mr. Benson, I have a quick question, I guess, for you and for Bobby. Several of these recommendations, we talk about end of year, year end, running reports, booking things. I hope, the conversation happened before the report, because here we are about to be in June, and we got these things that are on here, and if they haven't been communicated, do we have time to correct them before next year in the way things are done? Because that's kind of the point, right, of having an audit presented before June.
Correct. So most of these entries are part of your closeout process. A lot of your receivable reconciliations and payable reconciliations aren't something that's done on a monthly basis and reconciled. And while some of them are, not all of these, a lot of these that we had journal entries to, that's what's going to happen between June 30th and the closeout, whether that be closed out and ready at the end of August, or historically it's kind of been our target date has been by the end of September, so we can start in October on the audit. And so these are entries and reconciliations that would be happening July 1 to September 30th.
Yeah, I think the answer, Mayor, is yes. However, it will not be easy. We're still down one person now, staffing wise, and some of the challenges that we experienced at the end of fiscal year 22 we're still sort of challenged with those right now. We'll be closing out this year on the same system that we closed out.
Yeah.
Unfortunately, last year. I think where I'm a little bit optimistic about our ability to do it is, as it relates to the entries that you referred to, we'll specifically be looking to correct these types of entries at the end of this next year. That doesn't mean that we won't miss a new entry or something. So I think generally the answer to your question is yes. I think there is time, but it will require real effort.
I guess further clarify my question, would have getting this audit report prior to the council seeing it and voting on it June 6th provided us more opportunity to be prepared to close out FY23 and do those things more correctly. So we're still putting ourselves, being put behind the 8 ball on the future.
There's no question that the delayed issuance of the audit is problematic and not where the city needs to be, moving forward. So the answer to that part of your question is clearly yes. And I think the part about do we have time to correct it, I think specific to these types of entries we do. So, but it would have been easier, yes.
Would you say that, it seems a consistent theme is both the system that we're using having issues and the staffing levels, and if we can correct those, that will correct many of the things that the issues we've had. Would you both agree with that, Mr. Bentz?
I do, and we come out at interim work, and we come out whether it's in June or July, it's interim before field work, and we go over these type of items with management, and a lot of this isn't the issues we had last year, and so I do. It's not ideal. All of these entries are very correctable, all of them are things we can kind of help look at interim and make sure that Mr. Arnold and his team are thinking about those entries. But when we don't know they're there, you know, we wouldn't have expected it this year. And with all that went on, it doesn't, I don't just, you know, I'm not supporting it, but I certainly can understand why some of the year-end closeout entries are here this year. But like I said, they're all 100% correctable. They're not unusual or things that would have just, you know, slipped by your management team. I think it was just a matter of having too few people pulled in too many different directions, which generated a lot of the issues in the journal entries this year, and ultimately the timeline as well. Any other questions or keep moving?
You can continue on, thank you.
Okay. The last couple of slides here I have just talk about some of the new upcoming GASB standards. And so again, GASB being the accounting standard setting body that drives the guidance for local governments. We do have a few new standards coming out that are going to be applicable for the June 30, 23 audit, as well as some in the coming years. The biggest one is this, it's commonly referred to as the SBITA, it's your subscription-based information technology arrangement. And essentially, it is the same thing as GASB 87 that we just implemented, only GASB 87 didn't specifically address long-term arrangements for subscription-based technology. So obviously, technology platforms are access where you're not buying the individual hardware or software, but you're leasing the rights to use that. And so that's something that's going to have to evaluated, very similar to the way 87 was, and it's something that management will end up leaning on the IT department to kind of go through those contracts and identify where those are to kind of help drive the accounting on that. And it's ultimately going to look just like a standard long-term debt. So you'll have a right to use assets that you would bring on your books and a liability for whatever that net present value of those payments is determined to be over that contract term. The other two, we've got a couple of years, they're applicable in 2025, but they do have some effects. So we kind of want to make sure that you all as the audit committee and the budget and audit committee have the information available, but certainly it's something that, you know, as those times get closer to, we'll discuss in further detail. And then one thing in here that I think we mentioned last year, but certainly I always want to make sure that you all are aware, is one of the things we do for our clients, which includes management as well as governance, is we have a couple of different options now on email-based communications. We do offer a quarterly CPE that is 8 hours, an 8-hour-long class each quarter. And then we do newsletters periodically based on different topics that come up. And so if you're not currently receiving those emails from us and would like to, if you'll email me, we can get you signed up, and they come out through kind of mail blast. And so you'll see the topic of whatever the CPE training is for that period. And we try to make them relevant for the financial side. So a lot of the most recent ones we've done have dealt with GASB 87, GASB 96, and a lot of the ARPA monies that everyone's seen. And so we've done a lot of trainings on those in the past year and a half, 2 years. And if you have any interest, you know, you get the email, you're welcome to sign up and register, or if you have no interest or no time, you can delete it. And we don't send other marketing campaigns. It's merely just the newsletter and the CPE class emails. So if you're not currently signed up, all you have to do is just let me know and we can get you signed up and registered. And with that, that's all that I have for the presentation. Happy to address any other questions that haven't been addressed yet.
Mr. Bentz, what does the timeline look like, or do we have any remaining items to take care of to get this out to the comptroller and so that the city can post it on its website?
So it can be posted. It's ready to go. I told Mr. Arnold that I was going to release it to the CARS website this afternoon just to get through this meeting. And then we'll post it to the CARS website. It'll be submitted to the comptroller. The city's free to post it on their website. It is final dated with all opinions included. And then we'll upload it to the Federal Clearinghouse because you did have a single audit. So you have 30 days from when it's issued to upload it, but we're going to go ahead and do that this week. And Mr. Arnold will get the email for him to go in and review that upload and then submit that within 30 days. And then we will have 22 issued and completed.
Okay. Any other questions for Mr. Bentz or Mr. Arnold? Thank you, Mr. Bentz. Appreciate it. And if I think we have you scheduled for the council meeting, will you be here in person for that?
Yes, sir, I will.
Okay.
And for clarification, we have printed 16 copies because that's what was requested last year. Do you want printed copies for the meeting?
Printed copies would be welcome.
Okay. I will be there with printed copies.
Thank you very much.
Thank you all.
We'll let Mr. Bentz move on, and we'll move on to our next item of business, which is our FY24 budget. As I think everyone's aware, we've been working through a series of workshops with the council. That the last one we had invited our newly elected council-elect to come in and to be a party to that as well. Mr. Arnold has taken the comments that came out of the last session that we had and has compiled those in the documents that he's passing out right now. I believe you have 4 documents in front of you. One is a summary worksheet. The second is our expenses. Our revenues are also included, as well as a 5-year capital plan. Mr. Arnold, I'll let you take over with where we ended with the council and where we're at today.
Okay. I'll try to be brief, and so there's allow some time for discussion. As Councilman Taylor mentioned, it's a long process. I think we've now gone through, I believe, 3 mayor's, city council work sessions, a planning session on the front end, hear from directors on a daily basis. So here we are today. There are detailed revenue and expense reports by fund for you to look at. There's capital budget summary. What I might do is focus on this budget summary page in summary fashion. So since the city council work session last, working with the mayor's office and department heads, we've made some changes, essentially increased some revenues, particularly in the building department. And we made some adjustments in salaries, recognizing the fact that, as we've mentioned several times, the budget was built such that we would be fully staffed July 1 and would not have any turnover during the year, basically. So there was an opportunity to make some adjustments on that. There were also some other less material adjustments that departments requested or that we felt like needed to be made. The more significant change since the last city council work session, you may recall there was about $4.3 million that was actually included in the FY23 budget to be transferred from the capital outlay fund to the general fund. That kind of balanced last year's budget. Well, due to the fact that our revenues, particularly on sales tax, hotel tax, et cetera, have exceeded the budget, and as I've mentioned to you all year, we've been well under our expense budget for various reasons throughout the year. It was really not necessary to make that particular transfer, okay? I presented it in the last time we met in such a way, I went ahead and recorded it as if we would do that in order to, because we were budgeted that way, right? but there's really no need to do that. So the direction I received from the last council meeting was to reverse the budget work papers and take that $4.2 million and leave it in the capital outlay fund rather than transferring it to the general fund. And then we have prepared the budget such that we fully fund next year's capital budget request, FY '24. We've allowed for all the FY '23 carryover items that I know about. And we have projected or tried to prepare the numbers such that we would end up with a $1 million reserve, if you will, at the end of FY '24 in the capital outlay fund for things that we don't know about today. So we've done all of that work, and if you'll just look at the capital outlay fund, which is on this budget summary, it's on the far right-hand side there. You'll see that in FY '24, we have revenues projected of $5.4 million, expenses projected of $15.4 million. By the way, the revenues, if you may be wondering, well, what are those revenues? They're revenues reimbursement for the homeless center that's coming from the CDBG block grant. There's some funding that we receive on certain infrastructure projects. That item I can show you. It's by the way, the detail is actually reflected in the report. The expenditures at $15 million in expenditures, again, that would fund the carryover items from this year, plus all the requests that have been made in FY '24, which total about $8.1 million.
All the approved requests.
Yeah, that's right, all the approved. Yeah, there were others made, that's correct. So I think the non-vehicle capital requests that have been approved, it's about $5.1 million, and I think the vehicles were,
3.116.
okay, and I think the vehicles were
116.
3.116. So that's what comprises that $15 million. And as we discussed in the last city council work session, in recent years, we have transferred funds from the general fund to the capital outlay fund for various capital projects that the council approved. But in addition to that, I was a little surprised to see, but I understand why, that the last couple of years, because we've had the ARPA funds available to us and some other grant funds, we have actually not expended quite as much of our capital budget the last couple of years as we had budgeted for, right? So if all things come to fruition, we'll have about an $11 million surplus, not surplus, an $11 million fund balance in the capital fund at the end of this year that would carry over to next year. So that's kind of the capital fund. Now, the flip side of that, if you don't mind looking at the general fund on that budget summary on the left-hand side, when we, I'm leaving out one important point. To do everything that I just shared with you on the capital side, that was going to actually result in a negative fund balance projected at the end of next year in the capital outlay fund of about $2.9 million. So the council discussed at the last work session the idea of recognizing the healthy fund balance in the general fund that you heard Mr. Bench talk about there, that we would propose for today for consideration a transfer from the general fund to the capital outlay fund to help fully fund what I described. And that's about, it's right at $3 million, $2,985,000 or so transfer from the general fund that's required. So that's the reason when you look at the FY '24 column for the general fund, you see that expenses projected projected revenues by about $2.9 million, and of course that would come out of our fund balance. So that's a quick summary. of
Yeah,
where we are.
is everybody tracking with
Yes,
where
I
we
think
were?
for non, like, I mean, that means, so our operating expenses were balanced. The 2.98 is what we're taking over out to the capital outlay fund, give or take.
Generally,
Yeah.
there's actually still, Mayor, I don't remember what the number is, $60,000-$70,000 deficit in the operating side.
Yeah, I think once we look at the
Yeah.
spreadsheet that Stacy sent today, we should.
Yeah, there's plenty of opportunities to balance that, but generally what you described is right, so.
I gotta get the whittle knife out. Machete's gone, the whittle knife out.
And so that funds the capital, the approved capital request, and that funds
The vehicles.
the start for take-home vehicles for police.
That funds 41 vehicles collectively for the police department. 30 of those is for the 3 years. 3 years patrol vehicles, which will give us 30 up front as opposed to getting 10 a year. And that'll include, investigation and, gang.
That departmental
stuff, yeah.
requests, okay.
I have a couple more comments
Go-
before
go
we
ahead.
finish, but, we're beginning to round out matter of fact, if you look at the detail of these reports, we've, completed, our work on most of the grant funds. They're in there now. Still wanna make sure we're not missing one. It's hard to get your arms around all the grants, so we'll continue to work on that. We've also begun to, round out some of the minor funds, and we'll be able to kinda like the community develop, not the CRA, well, that one's in there, but the Community Development Fund that the Housing Authority administers, the, Police Drug Fund, the Metro Drug Fund, the Landfill Fund, some of those minor funds, we're almost to the finish line on those as well. So,
Okay.
those are all immaterial, so.
Questions from the committee on where we are at present?
I have a question, sorry I missed most of the meetings, but for the past years, I've been asking for an increase for city council travel.
Mm-hmm.
Yeah, we're at 25,000.
Yeah, 'cause we had other members coming on, 'cause I
Yeah,
think
we,
it's-
we increased it last year from the whatever, 5 it was or something like that, to, it's 25, so it's still in there at 25,000.
Yeah, that's in the budget. We also increased the postage as some council
I just
members
want to,
requested.
I want to encourage other council members to participate in the other
That,
conferences.
that trip to Europe is not to be held off, but.
Why you gonna do that?
That's a high-level summary of where we are, in the spirit of transparency, which we all believe in. I want to just point out a couple of things, though. If you look at the general fund and the budget summary, it shows that from 24 compared to 23, it shows an 8% decrease in revenue and a 2% increase in salaries. But those numbers reflect all the confusion that you hear me and the auditors talk so much about as it relates to transfers from fund balance and transfers between funds. It kind of skews those variances. So I've looked at that. Actually, revenues are going up when you exclude the kind of non-recurring
We're
transfer.
looking at actual revenues to budgeted revenues, right, is what we're looking at. We're not looking at
We're
budgeted.
looking at actual
Yeah.
compared to annualized. They're going up about 1%. So I think we do have a conservative posture on the revenues. Expenses are actually going up about 10%. And as we've talked before, we're trying to take care of our employees. We're implementing the next round of compensation study. We're making some favorable changes in the benefit plans for our employees, adding four-tier options on the benefit selection. Health costs go up. We're kind of maintaining the city's spending ratio on the cost of the health plan, some things like that. So I just didn't want you to look at this later and say, wait a minute, revenue's going down 8%, and expenses are going up 2%. Those are impacted by those transfers.
Couple of items that I'm aware of and I've written some recommendations here that I'll kind of pass out. As we kind of finish up, as Mr. Arnold's office finishes their work. And there's one from Ms. McKinney too. Again, I apologize for being short, one copy there. The first is JTA. We've talked about this Currently, we have them budgeted at $1 million. Their request, I think, is just north of 1.8. And the recommendation is that Mr. Arnold, the mayor, or their designee would get with JTA and align those budget requests and the city of Jackson's contributions. I think we need to do that to avoid the situation that we found ourselves in this year, and just communicate to them what we've got budgeted and how they can use that to reflect their service that they're providing. The second is city court. As most are all aware, the council's commissioned a study on city court. I talked to Ms. Luna yesterday. She said they're in the early stages of that. The individual that we commissioned had to wrap up some other work, and he's just now starting on that. I think we all talked about an assumed need of having some software. The way that I had seen this was, while they've completed some preliminary work on that software, we may want to wait on that to make sure that we're getting software that can take care of all the needs identified in the study, rather than just firing off and getting something and it may not
He
meet
hadn't
all
even
the
had a
needs.
site visit yet. He's working.
I don't think he's even been,
He's working, he's trying to schedule it. He's sent out emails this week trying to schedule
Okay.
it with city court staff.
Yeah, so I think we're still early in that process. I know that there was some discussion about trying to budget for that for this year, but I think we'd be,
We'd just be throwing a number out there.
exactly.
Yeah.
It could be 25,000, it could be 100,000
Yeah.
by the end of it. And the third is what we talked about earlier, Ms. McKinney. As we transition from a budget audit committee to a standalone audit committee, the recommendation is for you to have a comprehensive review of the findings of both the city's audit and the Jackson Transit Authority's. I didn't include JEA because they didn't have any findings in theirs, nor the CRA. The audit committee will need to provide, as per the ordinance, a written statement to the city council that the audit committee finds management's proposed correction active plan satisfactory. And then, as we've talked before, developing a plan to kind of ensure those findings are corrected over the year. And that most likely, at this point, as the mayor discussed earlier, we'll be looking at really FY 2025 for that correction. So this budget that we're going into, being able to implement some controls on that.
Yeah, then we'll have, I'm trying to think through, 'cause I don't remember off the top of my head the ordinance that we passed for the audit committee. Had to be appointed by July or in July that we agreed to.
Yes, I was gonna ask, is that,
I can't
I know
remember.
we talked about it, is that planning to start in July of this coming?
Yeah, it's planning to start, but I can't remember what the wording was, if we had it appointed by July or we had it appointed in July. So it's- I
Well-
have to go back and look.
I would think that if the new council members, as they roll on, could vote on
Yeah.
that, and that could be almost like we started the budget committee,
Yeah.
that July meeting of the first of the term.
Yeah. okay.
Kind of get that, because there may be some of them that want to serve on that. I guess any other questions on the budget?
I would like to make one more comment.
Yes, sir.
In case you're studying these numbers later on. For each fund, there's FY 22, and I want, because I did this morning and confirmed all of this, the numbers that you see in the FY 22 column reconcile with the audited numbers that you just got through saying. Now, the presentation is a little different. For simplicity purposes, for this thing, I elected to group revenues and expenses. In the audit, you have other financing sources and uses, but the fund balance is for the funds at the end of FY 22 that roll forward into the 23 numbers, that translate to 24 numbers. Those reconcile with the audit. I checked those this morning. So.
And that fund balance also reflects approximately where we want to be, as Mr. Bent said today, shooting for that 25 to 33% fund balance to expense ratio.
I mean, yeah, even with transferring that 2.9 over, we're still over there.
Yeah, you're still
Yeah.
31, which is exactly where we aimed to be 4 years ago, and so it's good to be able to spend that and not have to go out and get additional revenue at this point to meet those capital needs. Do we need a recommendation from the budget committee on the budget?
Yeah, I was thinking, we need a recommendation from budget committee on the audit too, is that the council has to accept the audit, don't they?
Mm-hmm.
Yeah, so we probably need a recommendation from both, on both items.
Okay. Any other questions on any of these items before we proceed to these votes of recommendation? If not, do I have a motion to recommend the approval of the annual financial report for the fiscal year of 2022?
So moved.
Do I have a second?
Second.
We have a motion, a second. All in favor say aye.
Aye.
Any opposed, say nay. Motion carries. Second, do we have a motion to recommend in its current status with some of these adjustments to move forward the FY '24 budget to the city council?
So moved.
We have a motion and a second. Any other discussion? All in favor say aye. Aye. Any opposed say nay. Motion carries. And then finally, do I have a recommendation to move forward on the Budget Committee recommendations regarding Jackson Transit Authority, the City Court, and the Audit Committee?
So moved.
We have a motion. Do we have a second?
Second.
All in favor say aye. Aye. Any opposed say nay. Motion carries. Any other business today?
Do we envision this committee meeting again before
So we'll have, once we get,
final approval
yeah,
by
once,
the
so
council?
once we get the final numbers, it'll be on the agenda for the June 6th meeting for first reading for council. And so I would say if there's any material changes between now and then I would recommend that this committee meets, but if there's just the minor changes that were talked about, then there's nothing material to change, so.
Okay.
Do we have a second reading scheduled?
Scheduled for the
13th.
Yeah.
As some of y'all are aware, I have a spreadsheet that kind of tracks some indicators that we look at. I was putting this in there, and I'll just distribute that to the group when I get that done to the council and future council members as well. That way you can
I don't
see.
think you're gonna get rid of that spreadsheet, you still keeping up with it?
Yeah, well, I'll still keep, you may not want to see it, but I'll keep up with it. All right.
Was you leaving? I said,
Any other business?
yeah, can I make a recommendation that you
Huh.
stick around about
Well,
a year?
You're gonna have to ask the missus about that. But again, if we don't meet again, I really appreciate each one of you for the work that you've done, and appreciate the mayor for putting this committee together. I think we've done some positive things over the last 4 years, and just appreciate the opportunity to serve in this capacity for the past 4 years, and look forward to the future that Jackson has.
Don't act like you're done serving in that capacity right there.
Well, if there's no other business today,
Let's adjourn real quick.
Thank you very much.
we will adjourn. Thank you.
I can't mess it up. So what should
I should have asked that first, you'd adjourn real quick.